Joining me now is Andy Barish. She's an analyst at Jefferies. Andy, it's great to see you. What names do you think are best positioned? I don't know if Sweet Green is one that you would cover.
Yeah, we do not, Kelly. Thanks for having me on. We actually look at the casual dining category as one where there really is a lot of opportunity. And it goes back really to what happened during the pandemic when a lot of capacity in competing small chains and independents was taken out by the pandemic. And the casual dining brands that were able to pivot, like a lot of the bigger chains, benefited from that and were able to increase sales through an incremental layer of off-premise sales. So actually the top line's been really quite good. And clearly today, the question has been costs and margins, and happy to discuss that a little bit more as we move forward here.
You're pretty positive still on companies like Brinker, Bloomin', Cheesecake Factory, Texas Roadhouse. Why is that? I mean, it would seem to me that, maybe a couple of them can do well. A couple of the others have perhaps been a little bit weaker, maybe like a Brinker. Explain why for all of them you're still pretty bullish.
Yeah, because we think the calendar third quarter earnings reports were really the bottom in terms of the negativity on margins and cost pressures. And a lot of companies had not taken significant pricing yet, including Brinker, which was only running about a half a point of price, as well as Bloomin', which was really hadn't taken pricing in over 2 years and now has subsequently taken an additional 3 points of new pricing increases. Texas Roadhouse, as you mentioned, is not one of our favorites because of the beef exposure. And I think that's going to be a commodity that will continue to be pressured for a longer period of time, while we think the 3Q and 4Q here will be kind of the peak in inflationary pressures and some of the transitory costs associated with supply chain for a lot of these casual dining restaurants.
That's a good point about beef. That's interesting. Tell me about Darden, a parent company of Olive Garden, Red Lobster. You seem to be more neutral on that one as well.
Yeah, the big difference, Darden's a terrific company, very well managed, the largest in terms of using its size and scale, which obviously filters down to supply chain and their ability to procure product at the best prices across their multiple brands in the portfolio. They've also come up with some really noticeable productivity improvements during the pandemic, from trimming menu items and streamlining processes and procedures. And I think their quarter that will reported actually at the end of next week will be a solid one. I just don't think there's any additional near-term catalyst, given the valuation is roughly 11 times or so forward year EV to EBITDA, when a couple of the other buy-rated names that I mentioned earlier, like Bloomin' and Brinker, are at half those multiples at around 5 or 5.5 times.
And of course, as soon as I say it, I remember that Red Lobster hasn't been part of Darden in about 8 years now, but I'll always think of it that way. Quickly on Starbucks, which just had that unionization vote, how much does that impact your view on the shares?
Not at all, to be honest with you. I mean, it was surprising that it was a company that, has really been one of the most progressive and forward-thinking employers in this industry since the get-go, and has recently announced on their September quarter call, their fiscal fourth quarter call, that they were making another $1 billion in additional investment in their team members as we move forward here in fiscal 22, including getting all starting wages to $15 an hour, taking wage increases starting in January for tenured employees, and then also committing to having a $17 average wage by the summer of 2022, in addition to all the other benefits and growth opportunities that Starbucks provides. I actually think they're one of the better positioned companies in terms of attracting and retaining team members to continue the phenomenal recovery they've had in sales, as well as growing new units. But obviously, there are some of those team members that didn't feel that way and felt they had to go another route to get their voice heard. But I don't think it's going to be a widespread phenomena for Starbucks or the industry for that matter.
All right, we'll leave it there. Andy Barish, bullish on the restaurant space, broadly speaking. We appreciate it.